Hello everyone, compliments of the season. I hope you're all enjoying the holiday wherever you are. My name is Ebuka Ambrose and um, go ahead and type in the comment section your name and where you're joining us from today. So type in the comment section your name and where you're joining us from today. Today we're going to be doing like a summary of the last 5 topics we've treated in the previous webinars, and we're also going to do a Q&A session where I get to answer your questions and probably ask you, one or two questions. Hello, Cynthia Albert. Welcome from Oka. Ibrahim from Abuja. Welcome. Ife Dayo from Ocean State. Winston from South Africa. Sheikh from Lahore. I don't know if I pronounced that correctly, but Daniel from Lagos. Natasha from UK. Ibrahim from Kaduna. Massive welcome to you guys. So I'm just going to do like a summary of the last 5 topics that we've treated. The first one was fundamentals of forex trading, which was the part 1. We talked about we defined forex, and we also talked about how transactions are carried out in the forex market. We talked about a forex broker. We looked at currency pairs, bid and ask price, spread, pips and points, trading times and sessions, and we talked about the advantages of the forex market. Second one, the part 2 of fundamentals of forex trading, we talked about how to create a demo account. I showed you guys how to create a demo account, and we treated terminologies used in forex. Told you guys about the nicknames of some currencies and hawkish, dovish, to go long, to go short. We talked about lot size, leverage, take profit, and stop loss, and also introduced you guys to types of pending orders. The buy stop, sell stop, and buy limits and sell limits. Third one, we talked about. I introduced you guys to the MetaTrader platform rather. I told you guys what MetaTrader is, and we looked at candlesticks and also 7 important candlesticks or candlestick patterns that you should take note of as a beginner trader. Where we talked about the pin bars and bullish engulfing candlesticks and all that. We talked about trends, uptrends, downtrends. We talked about support and resistance and how to actually execute orders on your MT4 app. The fourth one, we talked about chart patterns, which was the introduction to technical analysis. We talked about chart patterns, and I told you guys about the types of chart patterns, the continuation chart patterns, and reversal chart patterns, right? We also looked at how to trade chart patterns, and we talked about 2 indicators, the moving average and the relative strength index. And the fifth one was introduction to fundamental analysis, where I defined fundamental analysis and I gave kind of an illustration of how the news affects the forex market, and talked about factors. I think 8 factors that influence the forex market. We looked at 8 major central banks and their abbreviations. We talked about non-farm payroll and how to trade the news. So this is like a recap of what we've done. So if you have questions concerning any of these topics and subtopics, you can do well to type them in the comment section, and I'll look to answer your questions, because that's what we'll be doing right about now. I'm seeing Alfred from Abia State. Welcome. Wesley from Benway. Benjamin from Lagos, and Patrick Joseph from Lagos. Welcome. Okay, so if you are new to, or if this is your first time watching one of these webinars, you can check the previous, or you can just check the OctaFX YouTube channel. You're going to see these previous webinars, and you can watch them and understand what was taught. Okay, so I'm just going to take your questions. Who owns the forex? Who owns forex, and where is it located? Okay, forex is not owned by one person in particular. Forex is like an interbank market, which means transactions are conducted between 2 participants, a buyer and the seller. So as long as the current banking system will exist, Forex is going to be here. There is no, like, it's not connected to any specific country or person or government organization, and there is no central location for the Forex market. Someone said, this is my first time. How do I get the previous topic? Like I said, you can just check the OctaFX YouTube channel. You're going to see these topics and you can watch the videos. Okay, how much money do I need to start trading? Remember, first of all, you need to get a broker, and OctaFX offers a minimum deposit of $40. And generally, I'll just tell you to use what I would like to call unrealistic money. And I know at this point you're going to be like, what's unrealistic money? Money is real, right? Okay, so let's take this example. Now, you know why you do absolutely well on your demo account. That's because the money is not real, right? So you're just, practicing with money that is unrealistic. Now, if you can use that same methodology or mindset to trade your live account using money that you can afford to lose, money that is not so serious to you, then you still see it's going to give you like an upper hand when you're placing trades, because you're not going to attach emotions and all that compared to when you're using your school fees or house rent, which you shouldn't use. Another thing is you need to start small. As a beginner trader, looking to start trading the foreign exchange market, you need to start small. Okay. Why does any trade that I open start in a loss? So when you open a trade, it does not mean that you've lost the trade, or your strategy was wrong, or your trade is already losing. No, when you open a trade for buy trades, let me put this up. So for buy trades, you're placing your orders at the ask price line, and for sell trade, you're placing your orders at the bid price line. If you don't know how to add the ask price, you just right click, go to properties, and go to common and click on show ask line, and then your ask line pops up. It's the red one above. Okay, so if you're placing a buy trade, you're placing it at the ask price line, and if you're placing a sell trade, you're placing it at the bid price line. So whatever value is here, just like you have 89.76 for the bid price, if I'm to place a sell right now, it's going to read at the bid price. Now, for you to be in profit, for a buy, if you place a buy, which is going to be on the ask price line, the bid price has to cross over your entry point. And for a sell, which you're going to be placing at the bid price line, the ask price has to cross over the bid price line, which is your entry point, right? So if you notice, there's a space between the ask price and the bid price. Now that space counts for it's called a spread, and that is what counts for the loss. Okay, and it's really important to take note of spreads when placing a trade, so that you can decide if you're going for 20 pips and the spread is like 1 pip, you know that you're going to be profiting 19 pips. So you can decide to go for 21 pips just so you can get your 20 pip profit. Okay, so you must beat the spread first for your positions to become profitable. Okay. If Victor Jeremiah says, if the market is going against you, what is advisable to do? First off, I wouldn't advise you to place trades without stop losses, right? And once you've done your analysis and you've placed a trade, respect your stop loss levels and your take profit levels. Provided you're not risking much, you shouldn't be scared. Okay, so if market is going against you and you just respect your stop loss levels. If you hit your stop loss, you're wrong on that trade. Okay, losing sometimes is also part of the game, it's also part of trading, but you don't. It's when your losses are now so much, when you tend to have like a very long losing streak, then you need to work on yourself. Okay, so if market is going against it, okay, so most times the market may not get to your stop loss level, right? I could place a buy and it could go down like 10 pips before going into my direction, which is why I'm saying you should respect your stop loss levels. Okay, so you don't get to place a trade and if it goes against you, you close the trade and switch. No, don't do that. If you do that, then your analysis, you're not even confident from your analysis. Okay. Is there really any difference between buy limit and buy stop? Yes, there's a difference. For buy stop, you're placing your order above the market price, expecting market to, let me see if I can. Okay, let me just use a horizontal line. Okay, you see that red line up there. So for, I'm gonna take this. Yep. So for a buy stop, you're placing your order, your pending order, because a buy stop is a pending order. You're placing it above the market price, expecting market to get to where you've placed this pending order, activate and keep going upwards. For a buy limit, you're doing the opposite. You're placing your pending order below the market price, expecting market to drop down, activate at your entry point or where you placed your pending order and go upwards. So because it's a buy limit, market has to come down, activate at your entry point or where you place the pending order and start moving upwards, right? So for buy stop and buy limit, the market after activating at your entry point, the market tends to go upward because it's a buy, right? Or you're expecting the market to go upward because it's a buy. What do you mean by pips? Pip is the movement. Like you calculate your profits in pips, or currency pairs move in pips. Generally, everything that you trade in the currency market is calculated by pips. Okay, why do traders lose money? Like I said, losing is part of the game, right? You win some, you lose some, but you have to make sure that the outcome is income. So it doesn't matter if you, I know that was a lot of income and outcome, and yeah. But what I was trying to say is, sometimes you lose, sometimes you win, but as long as you're making an income, you're good to go. So it doesn't matter if you place, it doesn't matter the amount of trades that you place, or the amount of time that you win or you lose, as long as you're making an income. Let me give you guys an explanation with an illustration. So let's say I place 10 trades, or I placed 10 trades last week, right? And I lost 4. So let's do 10 minus 4. And I made, I won 6 out of these 10 trades, right? And my profit target for these 6 trades were 20 pips, and my stop loss for these 4 trades were 50 pips. Now, 6 multiplied by 20 pips. So I made a total of 120 pips in profit, right? But remember, I lost 4 trades, and my stop loss was set at 50 pips. So 4 trades multiplied by 50 pips loss. 200 pips. So I've lost 200 pips and I only made profit of 120 pips. So at the end of the day, I'm losing 80 pips, right? I mean, I profited more, right? Six wins and 4 losses, right? But I did not profit more in pips. So what matters is how much you make in pips, not how many times you win and how many times you lose. There are a lot of reasons why traders lose money. Some of them can be which is the very common one, lack of knowledge. You just come into the market, you just hear that someone clicked buttons and he's making money. You want to do the same thing without any knowledge of the forex market. You just come up, press buy, and press sell, and you find yourself losing. So you need to get a reasonable amount of knowledge of the forex market before you can decide to start trading. Another one can be no proper risk management. Risk management accounts for about 90% of your entire trading. If you don't understand how to manage your risk, then I'll just say you have a long way to go. Risk management is the medicine of fear. When your risk isn't is well managed and is in check, you're going to be confident to place the trades. Or for an already placed trade, you're going to be confident that you know how much you're risking, so you're okay with that loss if it goes the wrong way. Another reason why traders can lose money might be trading without a trading plan. You know the famous saying that if you fail to plan, then you plan to fail, right? So you should have a trading plan that's going to give you like a guide on how you can manage your trades. Going against the trend can be another one. Not using take profit and stop loss levels can be another one. Greed, attaching emotions. FOMO trading. FOMO is fear of missing out, right? So you're like, this chart pattern has formed right now. I don't know when next it's going to form. So I just want to hop on this trade, and you see yourself, opening multiple positions on a single trade. Open like 5 positions on a single currency pair. And if this trade goes, south or doesn't go in your direction, you find yourself losing an amount of money that would be very difficult for you to recover from. So greed and emotion is also a very strong reason why traders lose money. There's no reward for greed in the forex market, I'll tell you that. Another reason can be revenge trading blindly without analysis. I could go on and on and on. There are a lot of reasons why traders lose money, but I'll just tell you guys, in order for you not to fall victim of losing, you just need to understand or get an adequate knowledge about the forex market, backtest whatever you've learned, and yeah. So you can, talking about getting an adequate knowledge, you can go to OctaFX.com and click on education, go down to webinars, and then you're going to see, list of speakers that you can listen from, or you can listen to and watch their webinars. Actually, a webinar, is there any tutorial available for the beginners? Yeah, in the YouTube channel of OctaFX. Okay, how do I measure my risk and how do I apply it? In one of the previous webinars, we talked about lot size and leverage, and I gave a detailed explanation on the risk to reward ratio. So I think you have to just go look for this video, Fundamentals of Forex Trading Part 2, and you would find an explanation on how you can manage your risk. What is the best forex trading strategy? Okay, I'm not going to say there is an actual trading strategy that's the best, that always works. I'll just say whatever strategy that you've learned, or that you've learned, just go to your demo account and backtest this strategy. Sometimes I hear a lot of people say, I've tried the strategy, it doesn't work, but you find out that they only lost like 3 times. I mean, you tried the strategy once, twice, the 3rd time, and you lost, and you're like, okay, this doesn't work. Those 3 times could be 3 out of 10 times that you'd have placed a trade with that strategy, right? So you still have 7 more times. What I'm trying to say is, test or backtest your strategies for a longer period of time, so that you can actually understand how they work, what to do when using these strategies, and what not to do. They have different strategies: trend strategies, candlestick chart patterns, chart patterns, all these price action strategies. You also have indicator strategies and confluence strategy. What I mean by confluence strategy is like a combination strategy where you use price action, what you see on the chart, and add a confirmation from indicators to combine your analysis and place trades, right? Yeah. Another thing about strategies, specific strategies only work for specific instruments, right? So if you're trying a strategy on gold and you want to try the same strategy on Aussie dollar or pound dollar, just don't go straight to start using the strategy on the live account. You can backtest it and see if it actually works before you can use it to trade that instrument. Also, market forms new patterns, right? And there are differences. Sometimes market is in a continuation pattern, sometimes market is trying to reverse. So at every point in time in the market, try to adapt and find out strategies that you can use to fit in the situation of the market. I've got one example here on Canadian dollar against the Japanese yen. Okay, so right here, let's use this example. So if you notice, the market is trying to form what looks like a double top, right? And remember, I told you, whatever, at any point in time in the market, you can apply a new strategy or kind of like an adaptive strategy that's going to fit in what market is doing at the moment. So if I'm to look at this trade right here, I could just assume, no, not assume actually, I could see that market is already forming what looks like a double top, but I can't enter this trade unless I've seen a confirmation, which is another reason why traders lose money. No confirmation, you assume, you just see something like this and you're like, okay, this is going to be a double top. Let me just go ahead and place a sell right here. At the end of the day, what happens? Market could knock you out. So what happened just now? So this has already given me like an idea that this market is not going to form a double top anymore because it's already looking difficult to break that neckline that you have right there. So what do? I adapt. I'm switching to a different pattern right now, trying to actually observe what the market is going to do next. And what happens? So this is looking like a bullish flag pattern. Remember when I had my first assumption or my first idea about the market was a double top, right? Couldn't break the neckline. I switched up ASAP. So I'm seeing a bullish flag pattern. All I'm waiting for is a breakout, boom, to the upside. What has happened? Broke out from the resistance, which was difficult for it to break out from, closed. Remember, market tried to tested, couldn't break out, and now it has broken out. And it has also broken out from this zone, so I can decide to hop on a long position right there, set my stop loss at this resistance, and then I take profit. I could just use a good maybe 1-2 risk reward ratio or 1-3, or you can use previous points the market have tested, and then wait for the market to ride in your direction. So you see, first idea of the market I had in mind was a double top. Market started changing from the new pattern. I switched up and I still profited from the move. So there is no best forex trading strategy, right? I can't recommend any strategy as the best one. Whatever strategy that you learn, just go and practice and practice these strategies. Okay. Let's see. Can I really practice all the strategies on my demo account? That is one thing that I love about demo. Demo is actually free. Like, you don't have to pay to have a demo account. You can just go ahead, create a demo account. It doesn't take time. There'll be a link in the description. You can click on it and create a demo account and just start practicing it. Yes, you can practice every strategy on the demo account. The tools are there on your trading platform. Okay. Should TP or SL be set after order is placed? It all depends on. I prefer to know my take profit levels and my stop loss levels before I place a trade. Right, so you can decide to put these levels as you're placing the trade. If you go to your trading app, just like here, if I go to new order, you see that I have provision for stop loss and I have provision for take profit, right? So you can just put in your stop loss and take profit levels as you place your trades. Okay, what is the best time frame for a trader? Well, just like everything in life, it depends on you. What kind of trader are you? Are you a swing trader? Are you a scalper, a day trader? If you're a swing trader, you should be looking at analyzing the charts from the 4-hour time frame, the daily time frame. If you're a scalper, you're looking at the 30 minutes, 15 minutes, 5 minutes, 1 minute time frame for scalpers. Day traders, you can use 30 minutes, 15 minutes. So you just ask yourself, what kind of trader are you? Or you can practice to know if you're patient with trades or you're not patient with trades, right? So that's one way to find out what kind of trader you are. You can just practice to see if you like closing your trades or you like waiting for market to complete its movement and close your trades in profit. Another thing that you should know about the time frame is that shorter time frames, allow you to make better use of margin and you can have tighter stop losses. But when you're using a larger time frame, it's going to require the stop losses are going to be wide because the movement and the measurement is not going to be the same. One candlestick on a 4-hour time frame can be 20 candlesticks on a 5 minutes time frame. So it's very important. If you're a swing trader, you should use a reasonable amount of money to trade so you can handle market swings and not face a margin call. Okay, but most important thing is whatever time frame that you choose to trade, it should naturally fit your personality. So if you're a patient person, it's going to be easy for you to hold trades for long. But if you're not a patient person in life, it's going to be hard for you to hold long trades. And then emotion comes in. You see a trade ranging, could be in profit, but because you don't have enough patience or you're not a patient person, you see yourself closing this trade. It could be losses. A trade could be ranging in loss, hasn't hit your SL, your stop loss yet, but because you're not a patient person, you're like, let me just close this trade. I'll look for another opportunity later. So it's very important that your time frame and your trading style fits or aligns with your lifestyle. Which one is the best between MT4 and MT5? MT4 is like a manual version, and I would say it's the most used, but MT5 has more features, right? So I can't say that MT5 is the best or MT4 is the best. You can just go ahead and try both of them out yourself and see which features you like best. Okay, what's the best instrument to trade? I would just say as a beginner trader, you need to focus more on, major pairs like the pound dollar, euro dollar, NZD, like basically pairs that have USD in them. You need to focus more on practicing with those pairs because they are highly liquid. And if you don't know what liquidity is, it's like a measure of how many buyers and sellers are present in the market. There are like 7 to 8 major currency pairs that you can trade majorly, but you can choose from an extra list of 25 to 50 currency pairs to practice. I mean, you're not obligated to just trade one currency pair because you're looking for the best. You can also, select from various options that you have in the market. And if at the end of the day you just happen to like one so well, it's still cool, which book will you recommend to learn trading strategy? Okay, at the end of this webinar, you're going to get an ebook to your email. So I think that's going to be helpful as a beginner trader. How much is the minimum amount to deposit in OctaFX? When I started the webinar, I said it was $40. Okay, how can I open a live account? So before you open a live account, you should already have a demo account, right? In the second webinar that we had, talked about how you can open a demo account, and give you guys steps that you can use to open a demo account. Just click on OctaFX.com, click on open a new account, and the steps are like really easy. So you just have to fill in some details, but make sure that they're correct details. And then you'd receive, you'll be taken straight to your dashboard, which is going to look something like this. Okay, let me just answer this question. It's a very funny question. Why is it that when I place a trade, the trend usually goes in the opposite direction? This was one of the questions I had when I started trading. Like, if I place a buy, market goes on a sell. I get confused. Like, is the market against me or something? I would just say you should work more on your analysis, right? Work more on your analysis, because if you analyze the market, yes, keep in mind that you will not win all the time, but when you have a good analysis and a good strategy and you're placing confident trades, you would win most of the time, right? So you just need to check. Back test your strategy. Go back to, if you're on a long losing streak, just go back to the drawing board. Know what is wrong. Check what's the wrong thing that you're doing. It could be a minor thing, probably trading blindly. It could be anything, So yeah, sometimes the market can just hit you out of the market. It happens, okay. But if it happens often, then you need to work on your strategy. That's what I'm going to say. What's the minimum trading amount on OctaFX? $40. Okay, so back to how to create a demo account. So when you get to your dashboard, or when you create a demo account, your dashboard is going to look something like this. All you want to do is to click on this blue button that says create account, and then you select MT4 or MT5, whichever one that you prefer. As you can see, minimum deposit is $40, and then you can select MT4, MT5, and you want to change your account type to real. Most people use USD, so advisable to use USD. If you don't understand leverage, we have a webinar that talks about leverage, so you can check that out in the YouTube channel. And if you're someone of Islamic faith, you can put on your Islamic button. But yeah, if you click on, if you don't follow that category, you can just leave it off. So you click on open account, and so that's like 3 easy steps, right? I think. Let's see. Click on create account. Yeah, it's just really simple to create a live account on OctaFX, and you should not look to create most times when you're creating a live account, you're going to fund the account, right? I mean, what's the point of creating a live account if you're not ready to trade? So to deposit on your live account, click on deposit my new account, and it's going to give you like various options that you can choose from to make your deposit. If you're in Nigeria, you can do you can use the Nigerian local bank option, where you can do a transfer to a local bank. The details will be when you click on it, the details are going to come out where you can do your transfer. If you're using crypto, you can choose from Bitcoin, Dogecoin, various options that you can choose from, and there are no commissions, and they have the best exchange rate, and you also get a 50% deposit bonus on your trading account, right? As you can see, 50,000 naira for $121.52, which is a very good conversion, right? This shows that the exchange rate is actually really nice. Okay. Like I said, your questions should be on, the last 5 topics, okay? Because there are a lot of beginner traders here, so if I start talking about some advanced stuff, they will not really understand, and we don't want to rush these guys, okay? Okay, John Majesty says, please can you list the confirmations you must see before placing a trade? There are different confirmations, but when you have like 3 or more confirmations at once, it could be a chart pattern. This could be so it could be a chart pattern formation, and it could be this really nice bounce that you're seeing here on the moving average. It bounced, and it has bounced again, failed to break down below the moving average. That's also a confirmation. You can also use your candlestick patterns as a confirmation. So this is like 3 confirmations: the bullish flag pattern, the moving average, and this is also a breakout. So you can choose to hop on this trade because you've seen a breakout from the resistance of this bullish flag pattern. Most times the market tends to retest back at the resistance line. Most times the market tends to just do like a fake out and come back straight into the flag, which is why you should put your risk in check. Okay, you don't just play trades and tell yourself that you're 100% sure of this trade. It's not going to go wrong. Don't do that. Always put your risk in check. Okay. So I hope I answered the question, John, on how you can confirmations that you can see before you place a trade. Okay, let me just go ahead and ask 1 or 2 questions for you guys to see if you have actually been following this webinar. So type in the comment section the answer to this question. GBP USD, is it a major pair? Is the pound dollar a major pair? Yes or no? Is GBP USD a major pair or a minor pair? Minor currency pair? Yes, it's a major pair, as answered by Ifedayo Kenny. GBP USD is a major pair. Daniel also says GBP USD is a major pair, which is correct. Michael says it's a major pair, which is absolutely correct. Okay, a swing trader analyzes the market with on a 15-minute time frame. True or false? As a swing trader, a swing trader analyzes the market on a 15-minute time frame. Is that true or is that false? If your diet says true. A swing trader look to get more pips from the market, look to catch more moves from the market, right? And if you're looking to catch more moves, you're not looking at the 15-minute time frame, you're looking at the higher time frames. So the swing trader does not analyze. You can't do your analysis based on the 15-minute time frame. I mean, you can use the 15-minute time frame to look for entries, but your overall analysis as a swing trader should be on the higher time frames, right? So the answer is false. Okay, I'm gonna see if I can take one more question or ask you guys one more question before we wrap up. Olafusi says the swing trader analyze on the 4 hour. Yeah, correct. Okay, the moving average is an indicator, yes or no? The moving average is an indicator, yes or no? Okay, Kennedy says yes. Daniel says yes. Uh, Jerry says yes. You're all correct. The moving average is actually an indicator. So that's it on the summary um, for the last 5 topics we've treated in the last webinars and your question and answer session. If I gave you guys some quality information, go ahead and subscribe so you can get notified when I'm about to go live and talk about some really quality information that you need to know as a beginner trader. Okay. All right. So I'll see you guys in the next webinar.